that you do generate to the taxing for any a mining entity, you a limited company, or you did you trading as a sole trader. So if a sole trader, your rates are going to be different from a corporate company. They will be different from even small businesses that are under presumptive tax regime. They will be different from people who are earning from properties such as dividends, earnings, and interest earnings. So all that we shall be able to see. Then we have also what we call indirect taxes. The indirect taxes, basically, these are consumption taxes that we have within our economy and worldwide. So majorly, we shall look at value-added tax, and that's the major consumption tax where we shall concentrate. All our efforts will be there because value-added tax is so critical that whenever we see that we are adding value,
Sorry.
we are adding value, then we have to impose tax. So if we have to impose tax whenever we are adding value, then
Income tax.
we have to study and understand. We have to study and understand
What
what it is all about.
you take us to the first page? You took already. Send them to me, yeah? Yes.
We have to understand what value-added tax is all about, since it's a tax on value addition. But we as consumers, we pay for it without noticing, unless if you are a keen consumer to restaurant, ask for a receipt, and they show you the component of VAT. You go to a supermarket, you strict, you ask for a receipt, and you see the component of VAT. Or even any other items that you can buy, the phones, the computers, and things like that. Then excise duty is also levied on consumption, but these are selected consumptions, especially that are manufactured or that are on services which are delivered by entities that can really account for the excise duty. For instance, the banking industry. So banks can be able to charge excise duty and get a lump sum from their customers and remit URA. If you look at companies like Uganda breweries, they can charge excise duty on the bottles people take, and they get a lump sum, they remit URA. Likewise, telecom service providers can charge VAT, can charge excise duty on the airtime we buy or the mobile money we withdraw, and then they get a lump sum and remit URA. So excise duty is there on services that are really provided by companies that can have capacity to withhold and then remit to URA. Then we shall look at also import duty, and import duty is not for everyone. Import duty goes to importers, those whose operations do not exist unless they have gone to the foreign market to bring in materials or finished products to the Ugandan market. So that's where we see import duty coming in. So we shall also understand how it works and where rates are generated from. Then we shall look at withholding tax. Withholding tax has so many forms that we can see, but we shall break it down into what people do. Okay, so are we talking about performing artists? Are we talking about athletes? Are we talking about uh, are we talking about uh, people who have property like people who invest in shares of companies. So that is something we shall see as we advance. Rental income of late. So what property you need to generate income as you move around, you see people who heap sand and then sell it to then people in different. So you your own, and then people want rent from you. Then we say that you have and you government, yet there are no taxes. Okay, so by the end of this course, you'll have known as people who have gone through a business school that there are some fees you pay which are not taxes, and there are some taxes. Though, when you meet some illiterate traders, they will tell you that we pay a lot of taxes. We pay a lot of taxes because we pay license to the council, and then we pay the imposer, and then we pay then URA comes, it also wants taxes. So you realize that they are mixing so many things. So they are not aware that what they call imposer is never a tax. It is an operation mandate. Okay. a fee that is allowing them to operate in that within that market or that unit. Okay, so that's what we shall be seeing. Also, there is what we call a tax system. If time allows, we shall go for it. But if time doesn't allow, as the situation is normalizing, we normally have sessions with URA. So because we have Makerere University Tax Society, so we organize sessions with URA, and URA comes, trains us in the electronic tax system. So it was put on hold because there was COVID and we wouldn't meet physically yet. This chapter requires physical interaction when we are on the system. So I pray that we don't go back into what was called the new normal. We go into what we really know, so that we get the benefit of having the proper training. Then we have appeals and objections. Also, if time allows, we shall look at assessments. Now, when we look at assessments and we understand what they are, in most cases, some assessments may not be true, especially if they're generated by URA. Because the tax laws allow tax assessments. Look at your then that this and I fall into such tax band, I'm liable such amount of. But if URA carries out an assessment on your behalf, those assessments in most cases may be incorrect. Now, within the law, you are allowed to object to that assessment. If you're allowed to object to that assessment, then objection decision made by URA. So when you object, URA must make an objection decision, and then if it makes an objection decision, then if it's not satisfactory, you appeal. You appeal to the Tax Appeals Tribunal, and then after appealing to the Tax Appeals Tribunal, if you feel that the tribunal has not done justice to you, then you can go to the court, to the High Court. So all those are steps to see that clients get tax justice. Then we have local service tax and local hotel tax. These are taxes charged at local government level, and the intention is to have local governments actually being able to provide services in the localities. So we shall understand that local service tax is charged on people in gainful employment and business. Okay, so there are also bans that will follow, and local authorities go on collecting it. But the easiest way of doing it is when the business is applying for license renewal. When a business applies for license renewal, that's when local service tax is also charged and deducted. For employees, whoever's employing you, you inform him of your home, where you stay. If you inform him of where you stay, the employer deducts local service tax from your income and then remits it to the local government where you stay. And then local hotel tax is the tax on hotel occupants, or a tax on room occupants of the hotels, guest houses, motels, inns, and things like that. So also, that is a tax that is collected by local authorities. So they audit hotels or guest houses and see how many visitors do they receive, maybe in a month, and then the hotels have to remit that tax to local governments. where they operate. Then lastly, if time allows, we shall look at issues of public debt and tax, and issues of the East African Customs Union. As a matter of reference, you'll go to the book bank and get Musgrave and Musgrave. Musgrave and Musgrave helps us in understanding public finance, because tax is about public finance. Also will tell us more of government role to the citizens, and then what our taxes do as taxpayers. Then what we shall use commonly will be the domestic tax laws. So if you can get the domestic tax laws, and the recent edition must be of 2021. So we get the domestic tax laws of 2021, that will be very good. So the domestic tax laws of 2021, you cannot find them in the book bank, okay? Because they don't have that right to always be having amended income tax laws, okay? But you can access them from URA or from LODC. LODC must be having some good copies of the domestic tax laws. But URA also has a taxation handbook. So if you can get a taxation handbook from URA of 2022 or 21-22, it will be so good and so nice for us. So you sort out what we can do as you see the course outline, and you don't read everything, because if you try to read everything, you'll be misfiring. But as we keep on guiding you, you'll be seeing what is necessary at our level in that handbook. Also, if you get hold on my text, you can also get good use of my text. So it will give you some good insights into what we do at this level. So, ladies and gentlemen, that's what we're going to cover during this semester. And the problem that we have over delayed because of some communication issues, but we shall see how we catch up. Okay, we shall see how we catch up. Titanic, uh, Moonlight, I don't do those, but if I'm in the script on talking to you, I would have removed you. But okay, Laura, you don't know me, and I have never taught you, so that comment doesn't apply. I have never set for you accounting. Okay, so that comment doesn't apply. Moonlight, I think my volume has been always high, unless you're in a noisy place. Then I'll share the course outline with you. But in most cases, I don't prepare handouts. I don't prepare handouts because we are at a level of not giving handouts. I don't give handouts, but I try as much as possible to explain to you. And you go to the reference materials I have given you, you read. For instance, if you go to class and I explain thoroughly what we are going to do under a chapter, and I tell you that if you go to the Income Tax Act, read this section and this section, that is really good enough. And to you, you have smartphones. There's no way you cannot be able to get those materials, okay? I've directed you where to get the materials. URA taxation handbook is very, very important. That one is public information. And the BAT Act, what we call the domestic tax laws, that is public information. Musgrave and Musgrave is plenty in the library. You cannot finish them. So I'm sorry. I don't give notes. I'm sorry about that. But I try to and I endeavor to explain what we have to do for that matter. Okay. So in my classes, always people note down what they feel they have understood. And as they refer to the domestic tax laws, as they refer to Musgrave and Musgrave, as they refer to the URA handbook, they really get to know what we're talking about, and it provides a good understanding of what we do. So that's how I normally conduct my classes. So I want everyone to be able to actually read and understand on your own. But I guide the reading by giving you the scope and the boundaries or the confines through which you read. All right. For that matter, after introducing what you're going to do, let's precisely understand what tax is all about, the meaning of tax, okay? In simple terms, some people call it a non-quid pro quo payment, okay? A non-quid pro quo payment that is charged by government to the taxpayers. And why do they call it a non-quid pro quo payment? It is that if you pay that amount as a taxpayer, you don't necessarily ask why government has not constructed a road in your home area. You don't necessarily ask why government does not construct a health center in your home area. So for you, you pay and you stop there. But we also urge out, when you read Musgrave and Musgrave, it will tell you that government has a role to play in providing social services, okay? Because me and you, we may not have capacity to construct a road. We may not have a capacity to put up security within our communities. But if we mandate government, as we have all mandated government, to provide social services to us, we pay the tax. Therefore, government has that mandate to provide the social services we want. So we want to see that the tax we have paid has been allocated well, and if it has been allocated, service delivery has been done, okay? So on one hand, we argue that taxpayers don't ask where the tax has gone. On the other hand, government has an obligation. It is an obligation to provide social services that that can better our living. Okay. So in other words, some scholars also say that taxation is a matter of, or it's a price we pay for civilization. Okay. So there's also that definition from some scholars that if you see taxes being levied, so we are paying a price. We are paying a price for civilization, because, as I have just mentioned, that if government collects the money, it will construct the roads, they will construct schools, they have to subsidize on the power we consume, they have to subsidize on the clean water we consume, they have to provide security, they have to provide medical services. Okay, so all those aspects are taken through or are considered by tax. So having understood what tax is, then there are some key issues we need to understand before we go very far in our study. And those are going to be the key definitions that we must understand. Um, we have to understand what a tax incidence is. Okay, and in simple terms, a tax incidence is just an analysis of the effect of the particular tax on the distribution of welfare. Okay, so we analyze the effect of a particular tax on the distribution of the welfare. So, meaning that we look at where the burden to pay the tax falls and how that burden is affecting somebody's welfare. So, that is simply the tax incidence. Okay, we analyze the effect of a particular tax on the welfare of on the welfare of individuals. So, in other words, where does the tax burden fall and how does it leave the taxpayer? How does it affect the taxpayer who has paid the tax? Then we have a tax base being simply a sum of taxable activities that which collective or where its collective value, okay, uh, will bring will accumulate and will cause a big change within an economy. Okay, so a tax base is just a sum of all taxable activities we have in an economy whose value is going to cause a change within an economy. So we look at any activities that are taxable and we say though that is the tax base which can cause a change within our economy. Look at our transport business. Yeah, so it is an economic activity that is really good and vibrant, where government can tax right from fuel, okay, up to the income that has been generated by the transport operators. Look at the agriculture sector, though difficult, but it is something which is very, very lucrative that government can raise revenue. Look at the service sector. There are so many people who have gone into function, is it they call it events management, events management. So many people have gone through events management, and that came as a result of expanding the economy. So if it's an activity that is legal, we must collect revenue from there. So it forms part of the tax base that we talk about. Then, after understanding what the tax base is, some people may want to pay taxes and therefore dodge it illegally. Otherwise, may creatively know how to reduce the tax burden. And therefore, we come to these two concepts, the concept of tax avoidance and the concept of tax evasion. So, tax avoidance, in simple terms, this refers to the legal utilization of all tax benefits to the advantage of the taxpayer, to see that the taxpayer pays a lower tax liability. I repeat, tax avoidance is the legal utilization of all the tax benefits that they are available to the taxpayer so that he incurs a lower tax liability. So, implying that tax avoidance is acceptable, whereas it reduces the national revenue, laws allow it. For instance, uh, as we do business income, you will realize that companies will be allowed to deduct any expenditure that they incur when they make uniforms for their staff. Okay. Now, if now if the person is allowed to deduct an expenditure that has been incurred on providing uniforms to their staff, he will be reducing his tax liability legally because it is provided within the law. Therefore, he's avoiding to pay a much more tax because he knows the tax laws and therefore they cannot catch up with him. Or when we look at the consumption side, somebody may say that for me to avoid having a high tax liability, I'm going to reduce on my expenditure pattern. Say, I'm going to reduce on the airtime I buy every day. I'm going to reduce the beers I take every day. I'm going to reduce the sodas I consume every day. So, tax avoidance. Somebody was begging my pardon. Tax avoidance. I repeat, tax avoidance for matters of understanding. Tax avoidance is a legal utilization of all the tax laws sorry, of all the tax benefits that are available within the tax laws to taxation what constitutes a good tax system. Okay, so there are benchmarks that we have that constitute a good tax system, and if we see such things happening, we get to know that our tax system is good and all right. One, we have adequacy. And adequacy, this is a principle that says that a tax system must be able to generate revenue that covers expenditure. Okay, a good tax system must collect all revenues that can pay off its public expenditure. So whenever you see a government in deficit, just know that that government is not adequate because it cannot collect taxes that can cover its public expenditure. The only disadvantage we have in Uganda is that every financial year, public expenditure is just increased, okay, through creating more agencies, through creating more local governments and things like that. But otherwise, if we were to trim our public expenditure to focus on efficiency and effectiveness, therefore use more of IT than people where we create those structures or whom we create those structures for, then it would be more prudent. But in Uganda, we don't care about other things, but we care about expanding the public expenditure for that matter. So it's difficult to get a balancing budget or a surplus budget for that matter. Simplicity, we mean that the tax system should be simple to understand, meaning that a taxpayer must know which taxes he has to pay. A taxpayer must know when he's going to be assessed. A taxpayer must know how the assessment is done. Okay. So, in other words, it must be so easy a taxpayer to navigate gets the information he wants or files the return. Not that then confusion around tax, and then it is middlemen because cannot do such and such. Have a middleman. Have it increases the tax system must see that compliance cost the compliance where all pay the same tax because naturally we are not the same. You but out of inheritance. Others may not have, others may have income out of scratch. Therefore, we expect a person who's having income out of inheritance, uh, okay, out of inheritance, being richer than a person who has gotten wealth from scratch. Okay, it is very possible. Therefore, we cannot have taxpayers who are paying taxes at the same rate. We are not the same. So if you are not the same, then we must pay our fair share. Okay, that's the thing. When Section 19, Schedule 3, we find that we have tax bands, and those tax bands dictate that we pay taxes at different rates. Those who do not earn 235 million, sorry, who earn less than 335,000 a month, you will find that we don't pay any taxes. I repeat, within our economy, you will find that those who earn less than 235,000 shillings, they will not pay taxes. Now, those who earn above 235,000 shillings, they will pay taxes. They will pay taxes. They will not pay taxes at 10%. Others will pay taxes at 20%. Others will pay taxes at 40% effectively. Okay, so meaning that we have to pay our fair share. That is the direct tax on incomes. Now, when you go to the consumption side, if you go to a bar and one consumes tax equivalent to one who has consumed 6 bottles, okay, so he has to pay the fair share of the amount has consumed. Therefore, pay taxes for only the 2 bottles, and the one who takes 6 bottles, he will pay taxes on the 6 bottles he has consumed. So that's what we refer to as equity, and therefore paying taxes depending to our ability, okay, our fair share. Certainty, we have that principle of certainty, and certainty implies that as taxpayers, we must precisely know how much to pay, okay, how much to pay. The amounts we pay or the rates do change, or we cannot know taxes with certainty. Look at a scenario. You are told that you're going to pay taxes at 20%, filing provisional tax returns, okay? And then, okay, at the beginning of the year, your provisional tax returns were filed at 20%. Now, we change, okay? So certainty is where the taxpayer must know the tax he is going to pay, or the rate at which he's going to pay, where to pay the tax, how to pay the tax, and when to pay the tax. So as we are certain of everything we are doing, or of the process that we go through to pay the tax. Then we have convenience. With convenience, we are saying that the taxpayer comply. Okay, it must not be a burden for any taxpayer to comply. That if you are going to pay the tax, you spend the whole day paying taxes in the bank. Okay, so it must be an open kind of situation that if you find one bank with a lot of queues or with long queues, then you may choose to go to another bank that may have less queuing and which is closer to your business, because you don't want, as a business person or as a taxpayer, to move very far away from your business. So you want to be closer, that is closer to your business, and where you're going to spend lesser time. If it's about filing assessment returns for your assessment, let it be that you're going to do it within a limited time, not this filing of a whole day. Let it be that when you click on the website, the internet is fast, the page you want is downloads very fast, and the system is user friendly, so that it becomes so convenient. Okay, look at I'll give an example of telecom companies. When you run out of airtime, you pay or you buy airtime. Or if you run out of power, you want to buy power, where you seated, you buy power, and you are connected again. So that's the convenience we're talking about. We must see that tax system is such convenience so that it doesn't disrupt your business operations. That to get your money and pay the tax, because you're not getting business. Now you have chose to pay the tax. Now it should not be a hell of a problem for you to. Then we have the principle of economy. We are saying that the tax system must enable tax collectors to pay the cost of collection, okay, by government to meet other obligations. So if you find a tax whose enforcement or collection cost or compliance cost on the tax administrators is higher than the revenue that is collected, just know that that is a wrong system that we are using. Okay. I'll draw just an example of some time back, before you were born, or some of you who were born before you qualify to, and it was a tax that was abled person, especially male. With female who are not working, they would be exempted, but with males there was no exemption, and with the females who were working or who were in working class, there was an exemption. Now this was estimated to be higher than the revenue generated from graduated tax. So in any case, still insisting on collecting graduated tax. Therefore, it wasn't giving economic. So we're saying that economy, the amount you collect must be higher than the cost of collection. Okay, what we call the cost of compliance. Okay, so if you see, I'm saying if you see that the cost of collection is higher, then you abandon that tax. Okay, that's how the principle of economy goes. Okay.
What you want?
Then Sylvia, have you understood now what economy is? Because as I was explaining, glosh, the word glosh, that English name, I don't know whether it is the pronunciation, but glosh first brought in a comment that pardon me on economy, and I re-explained. I don't know whether all right. Any other issues that are arising out of what I have talked about?